it to YouTube or something or somewhere. It'd be somewhere, but it should be recording. Yeah, we're good. And now I'm going to open up this chat because in case you guys have a question, I might need to see that. So what you see right here is this is a Gartley pattern that I dropped last week when it was right. Oops, wrong way. It was right here. You guys see how price went from entry on my D and then that sounded hilarious, but it's terrible. And then pushed up about 30 pips over the weekend. Now, what I'm going to do is show you guys how we even get to this point of finding this pattern. And harmonic patterns are a great thing to use because, I mean, how else are you going to predict the market moves without, like, some of us are like very visual people. I'm a very visual person. So I gravitated towards harmonics because, like, I can literally catch a trade when price is still up here and know that I'm going to enter this trade down here at D and be correct on it. Like, it's not like we're predicting the market, but we know what moves are coming because there are rules set. And for these rules set to happen, we know when to hop into this trade. So I'm literally going to go to the same pair. I'm on Chef JPY 15-minute. Now, again, I don't know how new some of you guys are, but long story short, I'm using TradingView. I hope you guys are on TradingView and playing with some of these tools over here. I know that my Fibonacci tool, when I grab it, it's going to look a little bit different to some people that have mine color coordinated. You can also do that yourself how you want to, but I'll cross that bridge when I get there. So what I do, and one thing you probably will notice too, that me and Ray trade pretty similar because, you know, we bounce ideas off each other. I hop on his sessions, he hop on my session. So, I mean, you know, we bounce ideas off each other. We trade pretty similar. So there's continuity when someone has a question with like, oh, what does this mean? What does that mean? We're on the same level as far as how our charts get marked up and stuff like that. So what I'm gonna do is I'm starting with the basics. I'm gonna mark this chart up real fast for y'all, just so y'all can see how I get from a naked chart all the way to finding a harmonic pattern that ran up some pips. And looking at this chart, I remember when I first started, I was looking at this and everyone's always asking me now, it's like, what is those graphs? Looking at graphs, I'm not good at math. People will always say that I'm not good at math. And honestly, I know people who aren't good at math who are great at money. Like, you don't have to be good at math to trade. I tell people all the time, it's more of pattern recognition. So looking at my trading view, you guys see at the top of the screen, I have my favorites up here. And it's because I have them starred. Oops. I have them starred over here on the side. I have a star on it. And so it makes like this little window up here to show you, hey, these are your favorites. They're easy to go to. These are basically tools I use all the time. I only use like these 5 tools probably 98% of the time I'm on TradingView. Well, in this arrow right here. So what I'm gonna do is I'm taking my first horizontal line, making my line black. I make it black. Black is gonna be for daily levels. And what I do is I don't use the line chart. I use my straight candle chart as you see right now. I come on here and I am finding key levels. Now, I made a mistake back in the day. I probably can go through here and find like some old charts. I used to have all different kind of colors on here. I have like, my chart would look like a freaking rainbow on here. I might show you guys one real quick so you can see how unorganized my old charts are. They're probably just as unorganized as my new charts, but I'm going way back to, let's see what we got on here. I have some craziness on here. Let's see, I'm going to UJ, see what UJ has on it. Oh, it's naked. What's it naked for? Okay, I went through and cleaned them up. But yeah, oh, here's one right here. My old chart, looking crazy. Like, it's just rainbow colors everywhere. I don't know what line means what. I don't know what's going where. It's just, this is a mess of a chart. Even though you only see horizontal lines, this is definitely a mess of a chart because I have these different lines representing different things. Yes, I have a harmonic in here. You guys can see it right there. And it did go off for a good amount of pips, but you guys can see there's no organization to this. So if I was to drop this into a chat and be like, hey, I have a question about this chart, people would be like, okay, what does that red line right there mean? I'm like, okay, now I have to explain this to someone of what this red horizontal line right here means or what this blue line right here means instead of there being any structure to it. So what we decided to do was get a little bit of structure. So these black lines are going to represent daily levels. So I'm on a daily chart right now. Now I'm literally just looking for points where price rejected, looking for multiple touches. So right here, bam. Now I pick this point. And you can always tell when you pick a good point. I'm looking on this chart right here at this one point. Look at this one point. I have 1, 2, 3, 4, 5, 6, 7, 8, 9 touches on that same point just before I even scroll over. And that gives you a good indicator that this is a pretty strong point, that price has been rejecting heavily on this. And I hope you guys know that right now this is the level of support. Support becomes resistance and vice versa always. You can see back here, this same point was resistance right here and right here. This point was resistance. Right now, this point is support. Now, I know some people tend to get ahead of themselves, and what they do is they do not go to the IML Academy, and that's one of the mistakes that I made too in the beginning. I was like, oh, I'm just going to hop on a live session without going through any of the academy, and I didn't know any of the terminology, and that was 100% my fault. People come to trade and they want to put the money in front of the education, and which, I mean, that sounds good and all, but you got to put the education in front of the money, because if you don't know what you're doing, you're not going to make any money. I mean, you might make money with like copying and pasting, but when you sit here on your own and try to hop into the charts all early, you're not going to know what the heck is going on. So one of my biggest things I can tell you guys too, from me doing this 2 years, well, approaching 2 years, do not put the money in front of the education. You get the education, the money will come. And the main thing is people be like, oh man, I'm investing into this, and I've been doing this for a month or two, and I still don't know how to trade myself yet. Put in that work, man. Use swipe trades, use the harmonic scanner, do what you can, and then come back to try and do it yourself. Like, use what you can while you're learning. You said you skip some steps and then you stress the money. That's the thing too. I tell people all the time, man, if you are giving your last little bit of money to hop on IML and try to trade, don't do that. We don't want anybody here trading in desperation mode. When you trade in desperation mode, you make mistakes. And the mistake people tend to make is they don't see results in the first week and they quit. So therefore, now you done wasted your money to start, and you done wasted your time because you quit before you even had a chance to learn. I had someone that actually quit on me within the first day of signing up. They were hyped about it. You know, they talked about like, no, I'm gonna do this. I want to do this. We're gonna do this. We're gonna make money. We're gonna make this happen. And they quit on me the first day. And so I'm like, you quit on the first day. Like, imagine going to college. Imagine going to high school and it was like, man, this is different from middle school. I'm out of here. What is going to happen there? Nothing. You can't expect to get a diploma if you quit on the first day. That's what anything. If you go to a job and let's say you've been working a job for a while, now they move you up from a regular employee to a manager, and they're like, now you have a new position. You're like, dang, this is different from my old position. I'm quitting. You shouldn't quit anything on the first day. Well, I'm not gonna say anything, but you shouldn't quit anything you actually want to do on the first day or expect to get results from on the first day. So enough of my rambling about that. But you guys see, I'm just going through and doing levels on my daily chart where prices have been turning around. I'm not going to do every single level on here, but I'm just showing you guys that I'm looking at key points where price hit multiple times. So I'm drawing my circles again, like points right here where it's like 1. This level of right here is resistance. Right here is support because price is on top of it. Then resistance, resistance, resistance. You guys see that, right? And again, remember, previous support becomes resistance and vice versa. And someone said, in 6 months, I haven't made a dime yet. If in 6 months, if you haven't made a dime yet, you know, I was in that same boat too. That's why I ended up quitting the first time. I'm not gonna lie to you. I was making money from swipe trades, but I was like, man, without swipe trades, what can I do? And I felt I couldn't do anything. And so I was like, yeah, I guess this ain't for me. But the reason it wasn't for me because I wasn't taking it seriously. And honestly, Rob, if you have not made a dime in the first 6 months, hop on the Harmonic scanner, like for real. That's a money-making tool, man. And the reason why that tool is so valuable is because, I mean, it makes money. If it didn't make money, people wouldn't use it. I remember back when I first started, before I even knew anything about Harmonics or the Harmonic scanner, people were like, man, I made $1,000 a day with the Harmonic scanner. Man, I made $2,000 a day with the Harmonic scanner. I'm like, how the heck are they doing this? I know nothing about Harmonics except I know what a harmonica was. I know about harmonics. And so I'm like, how are people making this money off it? But they actually use it. They went through the harmonics. Hold on, I can't read and talk at the same time. They went through the harmonic trainer scanning and stuff like that. And I said, can you explain resistance and support levels again, please? I'm a little confused. Okay, I got you. I'm gonna take this real slow for y'all. You know, this is a learning experience. We're about to learn some things tonight. That's what we're doing. So I'm gonna go back to my daily real quick before I mark up my 4-hour chart. So bread and butter moves, bread and butter, always say that because, you know, that's like that old term people say bread and butter. People don't care about bread and butter no more. But this is like the basics of what you need to know to even set a chart up. So I'll make a line real thick for you. This one right here. This is a good example. Matter of fact, this right here is a better example. I made this one here real thick so you know what I'm talking about. This one. So when you see a level of resistance, which is right here, resistance meaning that, get my other line, make sure it's right. Nope, it's not right. Let me fix this real quick. I knew that's going to happen. See, I know myself. This and then arrow, and I will make this nice in blue for you. Bam. So we'll take the same line right here, and you see how price came up to this point and then turned around. It hit the thing we like to call resistance. So this right here would be a nice level of resistance. Hope I spell this right. Don't judge me. Resistance. And I will color this, not in white, I'll color this blue. And unbold you. Bam. So resistance is when price comes to a point, price is under this point and comes to and turns around. Now, support and resistance are inverse. So think about support as something being held up. When you support somebody, you know, they might lean your shoulder to cry. You're holding them up. You're not pushing them down. Resistance is, you know, is price hit a wall and turned around. It kind of stopped. It hit those brakes. So this is resistance right here. When price comes up and hits a wall, that's resistance. Now, inversely, at this point, I'm gonna get a rectangle. See this whole point right here? This whole point right here is support. Oops, that's the wrong thing. Bam. We're driving the car right now, or a scooter or something. Let me mute that bad boy. I don't know who it was though. I can't see. It's too much people in here. Hold up. Ray, if you can, because I don't know who's unmuted and who's not. Bam. I'm doing mute right there. I don't know who's driving the car right now, but it does not matter. Like I was saying, so this is resistance right here. When price is below this and then pushes up, hits the wall, turns around, that's resistance. Now, inversely, support is when price is on top of it and cannot break through a certain point. Okay, I'm going to mute all. Bam. And that's better. So you see how price is sitting on top of this right here, right? See how price came there over and over? 1, 2,
Yes.
3 times, 4 times. Oh, you found the culprit. There you go. So you see how price came here multiple times and rejected it? That's support. Price is sitting on top of this point and it's hitting it and turning around. This happens on every time frame, on every scale, over and over and over again. Some of you erase these, some of the arrows inside here. But you see how when price comes down here, it just rejects. Even right here, when price wicked down there, it came right back above that. You said consolidating? Yeah. Even with consolidation, when you learn harmonics, it works for you. It actually works very well for you because I made a lot of money on gold straight from what people will see as consolidation. But in that consolidation, there's just patterns happening back to back to back to back. And so how you see that right here, resistance prices below, and I'll give another example of resistance will be right here up in the middle of this. You see it right there? When price came to that same point again and turned around, that right there is also resistance. Price cannot break through that point. It went down here, found some support, and then it finally had momentum to break through this level of resistance. And what did it do? It found support on previous resistance. So when you hear people say support and resistance, all it's simply talking about when price is on top of a point and when price is below. Resistance is below, support is above. And I'm going to erase all these. I'm going to have lines all over this chart, but you guys see it. Price is below, resistance. When price is above, it is support. Think about like price on going to the next level, the next room, the next floor. that floor is supporting price. But when price can't break through that floor, that's resistance. So I'm going to erase all this, all of that. Now, let me unbold this line. Bam. So now, this I did all of my daily just now. You guys see the support and resistance again. I'm just finding levels. So I went through and I found all those points where price was tapping these lines and turning around. For again, one more example right here. This is resistance at this point. You see when price came right there and then dropped down? But on that same point, price was, whoa, that's crazy. Price was at a level of support right here. You see how price tapped that and then went up? That was support right there. And then it turned to resistance when price finally went under it. And delete, and delete. And again, the bottom down here, this is all support. Price is just on top of that, all support. Now, again, these moves happen over and over in different time frames. This right here actually should be a gold one. So remember, black lines represent daily. The place I struggle most with is when to exit exit a market. A lot of training material goes over the ideal entry, but there isn't all that much on exit. Now, let me tell you a tip on exit while I still mark this chart up. A tip on exiting is have in your mind what you're trading for. If you're trading for 20 pips, take your 20 pips and run. As I used to always say, take the money and run. You don't have to sit in a trade and wait for it to go for 400 pips if you're only expecting to get 50. Take your 50 pips and run. And if it goes for 400, let it go for 400. You got your 50 that you needed and you're fine. Don't sit there and hold and hold and hold, or watch a trade turn around and you be like, man, it's gonna go back up, it's gonna go back up, it's gonna go back up. Take your money and run while you can. It's all about you growing that account, not you holding that account forever, especially if you're not considering yourself a swing trader. If you're not gonna sit there and swing trade a trade for like 400, 500 pips, don't set yourself up into thinking that. And I know we all want pips and perfect entries, but there's 1,000 ways to enter a trade, and there's 1,000 ways to exit a trade, but the easiest way to exit trade is press close trade, or set a take profit and let it hit that. Don't just sit there and hold it until it keeps on going. Because I've seen a lot of people, even myself, have done that, where I've seen a trade go, and they come within a pip of where I wanted to go at. I just had to take profit. I didn't move my stop loss into profit. And next thing you know, I'm in negative when I was well in positive. And I see someone say guilty, because it's true. We all do that. We get greedy, like, man, I'm winning. I only wanted 20 pips, and now I'm going 25. I only wanted 20, but now it's going 50. I only wanted 50, but now it's going for 100. Let me see if it goes to 100. You know what happens? It gets to probably 99, then it goes to negative 75. You're still holding that same trade. Haven't moved your stop loss in the profit because you don't get stopped out too early. And now you're sitting there with the dumb face, like, damn, I should have did this, but it's too late at that point. So on the 4 hour, see my gold dotted line? This is now same thing. And key thing to remember too when doing these charts, remember that these straight lines, yes, at some points, like right here, it's like right to the pip where price is tapping it at, but these are more of a zone. So if you see me draw a rectangle like this as a zone, this line represents this whole zone more than likely, because yes, sometimes price comes to the pip, but price usually goes into a zone it does not want to be in. So when you see price consolidating, it's probably in a big zone. Like technically, if I move this right here down here, you can see there's a zone right here in the middle of this where price doesn't really want to be at. Even though it dips out and comes back in and dips out, it comes right back to that same zone over and over. So look at these lines as zones more than you look at them as a straight line. But them being a straight line does help you, because when you go to draw like a harmonic on a smaller time frame, you have a point of reference and a point of entry. But I'm gonna go through, I'm going to same thing, 4 hour time frame, get my horizontal line. It's now gold, and you don't have to dot yours. I dot mine because I like to break it up a little bit. I'm looking for same points where price has been tapping over and over and over again, like right here. Like again, somebody said something about consolidation earlier. Consolidation helps you because it shows you the points where price does not want to go. Like right here, this is a little zone of consolidation. That shows me that there's a zone on top of this and below this. So I do like that. And now I have 1, 2, 3, 4, 5 touches just that quickly, and all these touches over here in that same zone. So looking at it, I can probably do a zone on top of that too, but I'll save that for the 1 hour chart, because if not, I'm gonna have too many 4 hour lines on there, even though there's a nice little peak right here. This is another good example, a good giveaway when you're looking at when you're, yeah, I'm highlighting the touches. These touches are setting up my lines of support and resistance. That's all I'm doing right now. I'm just explaining to you why I do them at certain points, because as much as it is just to go through and do support and resistance, I know people be bragging about, oh my God, my chart is so clean. This clean chart is so pretty. I don't care how clean your chart is. If you can read your chart, you can read your chart. And if we can read your chart when you ask a question, that's great. But I know some people who trade Forex always post about how clean their charts are. They ain't showing all the stuff they erased off their chart before they posted their screenshot, or all the indicators on the bottom of it before they posted their screenshot. So don't worry about other people's clean charts and stuff like that. Make sure your chart makes sense to you and is legible. Well, it's legible if you ain't really reading it, but make sure it makes sense when you go to ask a question on it. Because I've seen some charts that look like confetti is on it, and confetti and graffiti, and people are like, "Hey, what does this mirror here mean?" I'm like, "I don't know. You tell me what that means, because I don't know." But just make sure it makes sense. So that's some color coordinate. That's what we color coordinate these and stuff like that. Even when I go through and show you guys diagonal trend lines and stuff like that, which I may or may not get to that today, because it's important. I love diagonal trend lines. I was showing Ray on Tuesday how I incorporate diagonal trend lines into my harmonics. And one of the plus sides about me learning harmonics was I learned all the basic stuff first. And so I found out how to incorporate the basic stuff into my harmonics, which, I mean, they go hand in hand anyway. So looking at this, I'm now bumping down to a 1 hour chart. On a 1 hour chart, I'm doing the same thing. Horizontal line, but this time we're going green and no dots. Solid green line. And I'm going the same thing. Levels of support, levels of resistance. This is, hey, if you can read it, it's all good. You're right. But when you go to ask somebody a question about it and they can't read it, how can they answer it? So I'm looking for another thing. Points of, look at that, support right there, straight across. And yes, there are lines above it. That happens, they went to the next level, and that's 100% fine. This is a little zone of consolidation right here. Not the cleanest line, but you see there's like 4 touches right there in the middle. So I can bet you any money that price came back to that same point again somewhere in the past, and bam, look at that. Before I can even finish my sentence, you see that the price came back there. Can you highlight the touches that you see? Yeah. So like I was trying to tell you guys earlier, I ramble sometimes to get off subject, but you guys can see that how I do these is, if you see a point where, let me get a line real quick, where price is like, it goes from here and then it comes down like halfway, I can bet you this halfway point right here is going to be a level of support. This has multiple touches on it already in that middle part. There's 1, 2 touches right there. So what I do is I look to the left and to the right of this point, and I look for more touches on it. But just with those 2 touches, I paste my line right there, and I see that price came back there again right here. And technically, remember, these are zones, not just straight lines. So if I drag this zone all the way across, you see all those touches in that zone right there. So with all those touches in that zone, that shows me it's a pretty strong level on this 1 hour time frame that price does not want to be there. So even when price approached that level, it turned around. So just by me seeing that, remember, we're doing key levels, not every level. If I did every level, there'd be 1,000 lines on here. We're doing key levels, not every level. So this key level right here is showing me that price came here again, and they approached it again and again, and then again right here, and then all through right here, price approached that zone and tapped it and turned around. So you guys know that this whole point right here where price is under this and keeps approaching it, that's a good level of, well, a good zone of resistance. Inversely, remember that's our key word for today, is resistance. Now, inversely, let me copy this real quick. Hopefully I'm grabbing the right thing. This right here, when price was on that same zone on this 1 hour, that was support. Remember, price is above it, price came down to it. Yeah, it probably did hit in the fib. That's one thing too, man. When we start really using that fib tool, you're gonna realize that a lot of these levels line up almost perfectly with Fibonacci levels. I don't know what magic Fibonacci worked when he was doing this, but he did that. He did some real good magic with that. So looking at this, you see that price came, again, this was support right here in the past. And what I say, previous support becomes resistance and vice versa. So right here, this was support, it became resistance all the way across here. And even when price broke it, it still became support right here in the middle and then became resistance right back behind it. That's literally just how simple that works. So now I'm gonna erase. This is recorded anyway, so if you guys need this recording, this will be uploaded somewhere. And I mean, we're gonna figure out where this is going at, so you guys can have this. What I like to do is actually take screenshots of this stuff, but since I'm actually getting to the point of the screenshots, I'll probably take screenshots of the key things you guys really need to know, like support and resistance. That's one, like I said, it's one of the bread and butter things, but it's one of the simpler things, one of the simpler moves you need to know and need to recognize, the support and resistance. I might actually need to line right there up a little bit. Let's see. I'll bump it up a little bit. So again, I'm not going to sit here and go through and do every single line. And I'm actually going to skip on the diagonal trend lines for now. I'll come back to that. But this is a very basic markup. So I'm going to zoom back out to my daily. So you guys can see I put most of my lines in the middle. We're going to be working from anyway. But looking at this, I might actually see a harmonic, but I'm not going to worry about that right now. But I'm just going to put the lines we're basically working from right here in the middle. So this is a basic markup that we have. And from here, know that daily levels is 100% going by eye. 100% going by eye. You see how our price wick the same level right here? Now we're down on a 1 hour chart. And this is a daily level right here. But look at the wick on a 1 hour. Look at those wicks. That's showing that price does not want to touch that zone. You see that right there? Wicks right here, wicks, wicks, wicks. Look at all these wicks. That's showing that when price comes to that zone, even right here, this 1 hour, look at those wicks in those 1 hour zones. Price does not really want to be in those areas. So just with that knowledge, I can go through and be like, hey, my zones are nice, my zones are pretty strong. So, and if I go down to a 15-minute, it probably show you even better. Now remember, it's not 100%, but for the most part, you're going to see daily level get more respect than a 1 hour level would, and a daily level get more respect than a 4 hour level would. And yes, these levels do get respect, but just know that, let's say I just blindly on replay. Let's say I just blindly rewind. There you go. I blindly got in a sell like right here at this point. Why would I get in the sell right here? I don't know. I'm just guessing I'm getting the sell at this point. Even though price is wicking on this daily level, telling me the price is going to go up, I'm gonna get in the sell at this point. But okay, this is how your levels play with you. This is how they show you the way a little bit. So you see how we had this momentum going down. I have a daily level right here. Even if I caught price like way back here somewhere, like, oops, let's say even if I caught price like, oof, what am I doing? Accident. Scroll over. Even if I caught, one more time, the same sentence. Even if I caught price right here, and I was like, okay, I see that price was rejecting off this 1 hour level multiple times. I'm going to sell it right here. I personally would only sell price from this zone to this zone. Now, the reason why that is because by me knowing I have a daily level right there that has been heavily respected like all the way across the board, I have a point of reference on this. So even if I don't fib this or anything like that, I know that there's a higher probability that if price comes down, it's going to tap this daily zone. And if it goes past that, that's fine. I'm out this trade already. And that goes to whoever asked the question earlier about when to get out. Get out when it makes sense, like right here. There's a zone right here. And if I've been watching price like tap here, tap, 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 tap. If I know price is going to tap right here and then turn around, why would I stay in this trade past the tap of this point? Even if price decides it wants to go down further and then come back right here and then go down, that's fine. I already made my profits off this, already got my 80 pips or how much of pips I got. I'm out this trade. I'm not stressing it. Now, again, when people get greedy and it's like, man, I'm selling this, I'm selling hard. Let me stay into this until price maybe gets down to this low. Nah, don't do that. And the reason why I say that is, remember, these lines are not definitive lines. These lines are zones. But you're sitting here and watching price tap the zone over and over and over. Right to that point, let it go. Same thing here with this big impulse leg right here up. You see that right here? This big impulse leg up. If I was to catch this buy, which is one of my favorite moves right here, they call it break and retest. I'm going to show you guys this break and retest too. This is pretty much one of those moves you really need before I even get to the harmonic. Like all these moves, like they just play hand in hand so nicely. See this big green move right here, this big impulse buy. By me seeing this, I would still only buy price from here to right here to this next zone. Now, again, reason that being, I could go through here and draw on my 1 hour. I could draw a zone right here too. See that? See where price has been tapping up and tapping again, like right here. I could draw a zone right there too. It's not necessary, but I can draw a zone there. But what I would do if I caught this buy right here, I would only buy price to this zone right here, because it definitively gives me a point of reference to where, okay, price has been there before, it found support there right here in the past. Look at all that support right there. Like price literally showing me like, hey, when I come here, I'm turning around. So when price comes in this certain zone, I'm getting out of this trade. I'm buying to right there. I'm taking the money and I'm running. Again, the key is to grow your account, not to hopefully grow your account. The key is to grow your account. So only way you can grow your account if you secure profits. So with that being said, let me erase you. And before I even go to this harmonic, I'll show you one more move too. This move happens a lot. I probably can show you this on plenty and plenty of charts. This one simple move right here, which is called the good old break and retest. Now, if you guys don't know what this is, I know some of the new guys probably wouldn't. What the break and retest is, when price, like, again, it's probably a zone down here too, but when price approaches a nice zone and wants to blast through, what it will do is when it finally gets momentum to break past it, it'll come back to that zone and retest it. And one of two things can happen. Either it's going to fail and go back under it, or it's going to more than likely tap it and go. Yes, exactly. The break and retest, man. That break and retest is like, again, one of those bread and butter moves, almost just as much as the level of support and resistance, because it happens so much. Like on one of my other sessions, I would have to go through and search my charts, but that break and retest happens over and over and over. And I love diagonal trend lines. I don't have anyone here right now, but even with that, it happens over and over and over. And like, just looking right here, what do you see right here? Same thing, break and retest. It went to the next level, and what did it do? Retested it, pushed up. It happens so many times, even on the way down, a break, a retest, over and over. That move always happens. Another one, a break and a retest. So if you guys don't know what to look for to break and retest, if you see like a zigzag line of price going above a point right here again, it came back to it. This retest happened multiple times. So look at that. It rejected it, retested it again, got momentum, retested it again, and it found that it couldn't do it. And what did it do up here? It tapped this one, broke it, and then retested it. It happens over and over and over and over again. Like that move happens a lot. And it's crazy how Forex moves and how any market moves, basically. Like that break and retest can happen diagonally on my diagonal trend lines. That happens a lot, and it happens on like horizontally too. So what I would do now is show you guys a little harmonic action. Let me actually exit out this replay. Nah, what I'll do is, yeah, I exit out this. So this whole story was to get you guys to this one point of where I was showing you the first pattern that I had pulled up right here. You guys say I have patterns. My chart's pretty messy, but I can read it. Like I said earlier, I have patterns everywhere. I have a pattern right here. I have a pattern right here. I have a pattern right here. Some people see these patterns as, oh, this is just consolidation, but no. These patterns tell you the story of where price is going to go at. And so you can catch all these nice moves based off of that. And I'll show you guys how to get to this point of even catching that, like catching that buy right there. We'll go back to my naked/cleaner chart. What we first do on this is with any harmonic pattern. Now, I don't know if you guys see my shirt or not. I am wearing a Gartley shirt. My Instagram is Modern Trades. You will see hashtag the Gartley guy on it. Because what I did was I took Ray's advice. Ray told me, do not try to come in here and learn every single pattern. What's going to end up happening is you're going to try to learn every single pattern. You're going to learn no patterns. And the reason why that happens is, imagine if you go to school, it's your first day of school, your first day of college, and you're like, hey, we're in college class, math, English, science, literature, everything. And this is all one class. You get one grade for all this. Now learn all this stuff in this one class and go do your other classes. what's going to happen? You're like, okay, I'm supposed to have a math class, I'm supposed to have a science class, I'm supposed to have a literature class, but now I'm putting all these classes in one class. And when that happens, you're not going to retain anything. If you're just trying to cram and learn everything, you're not going to retain anything. So I broke it down to where, okay, I'm going to go through and I'm going to try to learn one pattern. And the one pattern I gravitated towards was the Gartley because I felt like it was happening so much. But the reason why I felt like it was happening so much is because that's all I was looking for. Like, for instance, let's say, I have examples for days. Let's say you buy a brand new Porsche. You buy a Porsche, you buy a Honda, it doesn't matter what you buy. As soon as you buy that car, you start seeing that same car everywhere. Or let's say you want to buy a white car. You start seeing white cars everywhere. And it's not because there's an abundance of white cars or there's an abundance of Porsches or there's an abundance of Hondas. Well, there's a lot of Hondas, but there's an abundance of all those cars. What happens is you start to notice it more. You're looking for it. So when you're looking for it, you're going to see it more. Now imagine you weren't looking for any of these moves. If you're looking for a Gartley, a bat, a crab, a cipher, a butterfly, all these things, and then you don't know how to do any of them, you're at this point, you're just out there reaching. When you're reaching, you're making it hard on yourself. So what I did was literally, I took this one pattern, and it was 1 month earlier this year, but I want to say I only lost 2 trades the whole month. It might have been February or March. I only lost 2 trades that whole month, and all I traded was the Gartley. Because again, harmonic patterns have rules to them, and when you follow these rules, it makes life so much easier than sitting here and guessing like, man, I wonder what's going to happen here. Nah. When you don't have to guess, like, don't make trading hard on yourself. That's the easy part. The easy part is the trading. The hard part is the discipline and the mindset. And if your mindset is not that I'm looking for this one thing that I need, you're going to be looking for everything. You're going to end up finding nothing, which sounds bad, but it's true. Like, imagine another example. I had too many examples out here. But let's say you want to play the lottery, which, you know, we don't encourage it because some people call the lottery the dumb tax. But let's say you want to play the lottery. You playing a random number, you're gonna go and buy a random Powerball every day. Now at that point, every day you buy a lottery ticket, your numbers are changing, their numbers are changing. Well, how can you possibly? You're making it harder on yourself. Now, if you go and play the same numbers every time, your number's not changing, their number is changing. There's a higher chance that their number's going to fall on your number than if you pick a random number every single time and they pick a random number every single time. I'll come down with examples. I'm going to get this fib and stuff for you guys. So, like I was saying, first thing you find is an impulse leg. And you're looking at this right here, you guys see it. I'm on a 1 hour chart. You guys see this big push right here. So let me replay this bad boy to right here when I first dropped this chart. So you guys see this big impulse leg up, which I highlighted earlier. What I'm doing is taking my Fibonacci tool. You guys see it right here. Fib retracement. Now, when you guys first start TradingView, your fib is going to be a rainbow colored mess that I never use the background with the rainbow color zone because it just looks funky and unnecessary. So what I'm doing is I'm fibbing from this low point, this impulse leg, to this high point. Now, you might be asking me, but I see more move over here, down here. Now, if I was on a 4 hour time frame, I would count that. I would count this piece right here as part of my impulse leg if I was on a 4 hour. Now, the reason why I don't count this as part of my impulse leg is because you're looking at this and you see there's a whole nother movement. This is actually a piece of a break and a retest. So I consider the retest and rejection a separate move from this piece. Now, if I go to a higher time frame, like a daily or 4 hour, this might all be one giant candle. And if it's all one giant candle, that's a good impulse. But would you, hold up, wouldn't you go to top to bottom? Nope. Nope. That's the problem I first had too when I first started fibbing. When I first started fibbing, I used to always do them backwards for some reason. I don't know why. Maybe I'm dyslexic, but I used to always do that. I used to always do my fibs backwards. Like, what the heck is wrong with my fibs? They were backwards. But pull that bad boy right there. Now, remember I told y'all earlier how when your levels are correct, you will see that the fib will line up with them. This 86 is almost perfectly to this daily level right here. And this is just off a break and retest. And again, the reason why I wouldn't add this in here is because knowing that this is a break and retest right here, this retest and then big impulse move, which I'm guessing that was a news move, is part of my new move. So now that I see that, I have my impulse leg, which is bam, right there. That's my impulse leg. That's my first fib. Now, me being so skilled and doing the Gartley so long, this is literally the only fib I need to find a pattern. But I ain't gonna do y'all like that. I'm gonna show y'all the rest of the fibs too. So I'm going to erase this first fib. Matter of fact, I'm gonna type one here too. I'm gonna do it. This is gonna be the Gartley. And I'm gonna make this black and bold. This is the Gartley. Now I'm gonna give you guys the actual parameters for it. I know sometimes if you've been in my session before, I'd be like, hey, this is what I do. But you know, that some people do like, hey, this is what I do. But nah, I'm gonna show you guys the real parameters of what you do. And I shouldn't erase that fib just now. Oops. So back to here. So on your impulse leg, let's say you have this full move. And for you guys who have not used the harmonic scanner will probably show you a move when it's already like this already. It'll be just about done. The harmonic scanner is like, hey, it's a trade to take. And at that point, it's about to take off. So I'm gonna show you guys how to do it without the harmonic scanner, and then I'm gonna show you guys what the harmonic scanner would show you and how you get into it. Because I know some of you guys are really new, and so I'll help you out. I'll give you a little boost. So this is my impulse leg. My orange box is the impulse leg. So I'm gonna go impulse leg. Now, when I do this, when I say hypothetical, you guys will see why I say a move is hypothetical. Because at the end of the day, these harmonic patterns are predictive patterns, what they are. You're predicting where price will possibly go at. Now, a lot of times they do go that way, and sometimes they don't. And that's why we set pendings. And if you see that price invalidates, I don't know how many of you guys inside Ray's Beast Ass Trader group, but I posted earlier that if you see me post a pattern that's not complete yet, and you see the pattern invalidates, and you have pending set on there, just erase that pending. I mean, it's not valid anymore. So what you do is step one, you are finding that impulse leg. And this impulse leg rule goes literally for every single harmonic pattern. Like you need your impulse leg to show you what you're looking for. Now, step two is going to be you finding your B based off your harmonic, off your Fibonacci tool. And with that being said, your B is, what am I doing? I'm tripping. It goes 2, then B. 2, you're finding B. I can't type it in. Finding B. Now, what B is 618 minimum. So again, remember I was telling you guys about the rules you follow when you're trading these harmonics. First thing I'm looking for is, this is why my Fibonacci tool is color coordinated for. The reason why my 618 is blue, I know that if price passes 618 but does not go to 786 and close past 786, so price is in this zone, you see it's very, very close right there, but it's not touching that 786 at all. Now, my rules how I do it, it can wick it. If it wicks it, it's fine, as long as the price is not closed solidly below it. If it wicks it, like barely wicks past it, it's fine. I'm still gonna count it as a Gartley. That's what I do. You have to follow me up, but that's how I do it, and it's definitely been working. But you see how price is in this zone? I changed the color from orange for you guys real quick. Price is in this zone right here. It's past 618, not to 786. It's a valid B point. Now, when you're doing a harmonic, you are looking for your 618 minimum, and it's past that, and it's not a 786. So this is my hypothetical B. Like I said, I was going to say hypothetical B. Now I know I skipped X and A. Your first point of your impulse leg is going to be your X. Your second point is your A. You get out of here. Slide over. It's your X and your A. You use X and A to find B. And this is not algebra. Yes, I know it sounds like it, but no, it's not algebra. So now I'm taking my second fib and I'm going step 3, or should I say step C before I mess this up. Highlight all of, what are you doing? Highlight all of, oh my gosh. Okay. We're gonna go step 3. You're gonna fib A to, ooh, not that, A to B, and this is gonna equal C. And C equals a 618 minimum to 1. And I'll show you guys exactly what I'm talking about. Now, I know it's a pretty big range, but I find that price usually falls into that 618 to 886 range. But just know that price can push all the way up to A, but it cannot close past it, cannot wick past it or close past it. So I'm going here, I'm going A all the way down to B. I know mistakes some people make also too is what they will do is they will, instead of fibbing from A to B, they'll fib from A to 618. Don't fib to 618, fib to where B ended at. This is how you get your correct ratio for your C. And you see that my C is right in that window between 786 and 886. This is a valid C point, which also shows you too that this zone is like right in the middle of this 1 hour line right here. This zone, you see it? See how those line up like perfectly, like I was saying earlier? Like those things, they show you light. I don't know who Mr. Fibonacci is, but he did his thing with that. This be my C on my 786. So now I can erase this. Now my next fib, which is technically actually my first fib, this is why I said I can use the first fib to find the whole pattern. Now my step 4, erase. Step 4, I'm fibbing X to A again. This is going to equal D. Now D is 761 is a ratio I always try to stick in between, but price usually tends to hit 886. But there's another rule to this Gartley too. When I find this deep, I'm gonna show the first fib. So when I have a fib on top of a fib, you guys know exactly what I'm talking about. And I do not use I never use this tool right here, which I mean I guess it would make life easier, but I'm hard headed. But we're going X to A right there. So you guys look to the right. What do you see? Price is right at 886. But there's another fib I do. Also, you're taking your fib from B to C. You're looking for that 1272 zone. So you have a zone between this 1272. If wicks are present, take fibs from wick. Yes, I do it that way because it gives you more accurate where price actually went in. If you go down to a smaller time frame, if you go like to the 15-minute, you'll see that price went to the end of that wick as a body, not just as a wick. Maybe right here this would be a wick because I'm pretty sure that was an impulse move on some news stuff, but price still went there. And what tends to happen is wicks end up getting filled at some point. But you guys see this little zone right here between 1272 and 886. This is like the money spot. Now, know that price can push all the way down to X. That is 100% possible. But the plus side of you having now this daily level right here set up, you know that, okay, I have a daily level right here. I have the zone between my 886 and my 1272, and it's right in the same zone, that daily level. Price has been tapping there over and over and over and over again. There's a high probability that price is going to tap this zone and turn around. And so now that I have my X to A, my A to B, my B to C, and my C to D, I can now go on here and draw my pattern now. I'm gonna erase these fibs off here so you guys can see exactly what I'm talking about. I can now go in here and let me spread this bad boy out so I have some room and take my tool. I can now go X to A to B, B to C, C to D. And this is right in my entry zone. Now, the reason why I draw my entry on D at this line is because I know that this is a daily level. So even if price like wicks past it like this, it's still fine. This is still all in my okay, when it's stacked up, the first one is X to A, which is my same first fib. Then the second one that was stacked up was B to C. But you guys see, this blue line, this is my same entry zone. That's my 886 to 1272. That's my data level right there. So when I play this bad boy out, let's see what happened. And this is where price is at right now. So just that quick, like I'm at the point now where I can come on here and just see that first fib and draw my harmonic pattern. And the reason why I can do that is because I know just from eyeballing it that if I see an M formation, my C is not past my A, my B is past 618, but not to 786, I can draw a Gartley pattern just that quickly. So when I draw this right now, draw my fib out, you see that 886 is right here, and look where price turned around at, right at 886. So if you were in this, there was like minimal drawdown. If you were negative at any point, you might have been negative like maybe 1 pip. Let's see, you would have been negative, okay, 3 pips. I exaggerated. I wouldn't suggest it if you're still learning it, Kareem, because follow all the rules until you can get it. Now, the reason why I can draw this one fib and I can see that it goes to these levels and does this and does that is because I practice this pattern so much, like I know exactly what to look for. I can draw this exactly. See what Ray said? Don't do that. I said follow all the rules. Learn the rules you need to learn, and then decide you want to finesse it. That's like you don't come to first day of basketball practice, not know how to dribble and decide you want to dunk on somebody. That ain't gonna happen. You can't dribble. You're gonna run out of the court and just dunk. You're gonna carry the ball all the way down there. But I mean the daily, hourly, and whatever levels. Yeah, I mean the reason why you put those levels on there is because it just helps you with structure in general. When you know where price is going, where price might go, it helps you enter a trade better. Because sometimes I can go on to a chart and see like, okay, I see what might be a Fibonacci, what might be a Gartley tool, it might be a Gartley there. What I do is I fib it. Even if my chart isn't marked up yet, as soon as I fib that, I then go back and I would draw on my chart, draw my levels, because the levels are important. Now, if you're just coming on here and just drawing like harmonics in the middle of nowhere, you have no point of reference. So you don't know where price might go at. Like if your GPS is like, says you're in the middle of the ocean, go left, you can be like, okay, where am I going at? I don't know where left is at, because you have no point of reference. But when you have these levels on here, these hour levels, these 4-hour levels, these daily levels, you have a point of reference where price could possibly be going at and why it might possibly go there. That's why I was showing you guys why I would only ride certain trades at certain levels, because if I have a level there, I know what it can possibly do. So even on this, if I enter this, I know there's a chance that price could come down here to X. Ooh, let me change this color real quick. I know that price could come down. Where's my box at? Where is the box of color? Is it behind this? No. Where's it at? Let me see. Oh, it's right. Oh, I'm stupid. But I know that price can come down here. Now I'm being drawn down for a second before price pushes up. But I know that since I have a level right here, yeah, make sure you got the rules right. But I know since I have a level right here, is at 886, I have a data level right here. But price can push to X. That's part of the rules. But if I didn't have this line, let's say I didn't have this data level right here at all. Let me just erase this. Let's say if this right here wasn't there. How would I know where price is going to stop at? Just based off the fib, I can guess about, yeah, okay, 886 is right there. That's my entry should be at. But if I don't have a level right here, I don't have another point of confirmation. You want as much confirmation as possible, man. You don't want to just be out here shooting blindly. You want confirmation, man. And so confirmation is key. Confirmation will save you drawdown. Confirmation will save you money. There's been times where I've drawn a pattern. I'm like, man, I see there's a level right above it, and I'm not going to work with that level. And what happens is price goes right to that level, and me being exactly confluence, me being a newer trader, seeing that there's a level above my entry or below my entry, I'm like, okay, price could possibly go there, and it goes there, and I'm freaking out. I'm like, oh my god, what to do? But if I didn't have that level drawn, I wouldn't know that the possibility that price could even go there. But by me knowing that in advance, I can be like, okay, if price goes there, this might be another spot for an entry because X is still there. Price can go to X and it's fine. So if this right here was to take a dip and go all the way down to X and like back to 1, I'm fine because I know that price can go there. Prices are allowed to go there per this pattern. So I know I've done a million and a half similes and metaphors for you guys. Do you guys have any questions before we end this session? It's been about an hour, a little bit above an hour. But you know, I can go through here and all the time show you guys patterns. The patterns happen back to back, like bat pattern, Gartley pattern. I love the Gartley pattern. And this is right here's a big Gartley pattern. You guys see how it happened. Let me erase this red one real quick. Like these patterns happen a lot. Oh, before I hop off, I do have one more thing to show you guys. I said I was going to show you guys what the harmonic scanner would do. So if you guys do use the harmonic scanner, right? I'm gonna erase this. I'm gonna make this look like the harmonic scanner would look. I'm not gonna lie, though, I don't remember exactly how it looks. I haven't used it in a very long time. But in case you guys do use it, I think this is how it looks from memory. Yellow. So if this is your harmonic scanner setup, real quick, I'm going to erase this. I don't need that. I don't need this. So for you guys who are new, that new for you, I will show you guys real quick. I'm going to replay one more again. So if this is what the harmonic scanner has on it, you have a pattern. It's going to say Gartley 1 hour chef JPY. This is what it's going to say. And it's going to say entry. It's going to say entry. Matter of fact, I'll do 2 entries for y'all. It's going to say entry 1. Now make this blue. What the hell just happened? Okay, let's try this one more time. It's going to say, oh, really? That's how you did me? It doubled up on me. But either way it goes, it's going to say like entry 1. Why did it make 3 of those? Entry 1, we might say like entry 1 at 108,409. Entry 1 at 108,409. Oh, what is going on here? Oh, my num lock isn't on. Oh, thanks a lot. Bam. Let's say entry 1 right there. Now you see this 108,409 right there, right where I had my D, right where I had D lined up at. So it might say entry 2 at right at X. So entry 2 would be at 108,277. Now the reason why it would do that is because you know that price can come back down to X and it's still fine. But if it takes off at the first entry, that's fine also. I mean, just be in the trade. But know that if price was to take a little dip and go to the other one, you're fine with that too. So bam, that'd be your entry 1, entry 2. Now, for you new guys, if your entry is down at the bottom and then your take profit is up here somewhere, your TP, if your TP is above your entry, just know you're going for a buy, like automatically off the rip. So hold on, I'm gonna do TP. I'm just gonna put TP1 somewhere on here. I'm not gonna measure it out, but I'm just gonna put TP1 and it'd be like right here somewhere. That'd be your TP1. And then have like TP2 on here and stuff like here. This would be TP2. But just know that if you have your TPs above your entries, you're going for a buy. And your stop loss would be probably down here under this low point or right about at it. Now the reason why, me personally, if I was to take this chart, does it need a I pulse? Is it an impulse to be valid? Yes or no? So what the impulse is, let me go back real quick to like a higher time frame. Your impulse leg, literally your impulse leg is just a move like this. Like this can be considered an impulse leg down. And this next piece can be considered an impulse leg up. It's just a point where price just like pushed hard in one direction. This right here is an impulse leg down. This whole thing is an impulse leg down. You see that right there? That whole thing is an impulse leg down. Matter of fact, probably something right there. But I'm not going to fib it out because that ain't what we're here for today. We're here for the Gartley today, and that's what we did. So I'm not going to fib that part right there out. But that other Gartley I just showed you guys like 2 seconds ago on my main charts was right here in the middle of this mess. And you guys can see, I want to say I drew it on a 15-minute, but you get your impulse leg and you fib it out. And you see that your middle point, your retracement point right here is past 618, not to 786. Your hypothetical D point is right here at 886. And so if I draw this out, my bad, my throat's getting dry. I got that right there. I didn't fib the whole thing out, obviously, but you see it's the same movement. Like price is past 618 and it's at 886. And I can bet you if I fib from here to there, it's gonna be somewhere about a 1272 in that zone. There you go. 1272 to 886 zone right there where price entered at. So you guys see, it just works just that simple. Like it's real simple. But what you guys should do is definitely learn the rules of these things, follow the rules of these things, man, and make magic happen, man. But what I'm gonna do is I'm hopping off here. I hope you guys appreciate me. My name is El Mono Hamilton. Matter of fact, my Instagram is El Modern Trades, spelled. I'm typing inside the chat real quick. El Modern Trades. That's my Instagram. I drop setups on there sometimes. That's what I do. It's usually not always the Gartley, but the Gartley I drop a lot because I see them everywhere. I see them in my sleep. I see them on my shirt. And as Ray know, I got a Gartley hat too. I see them everywhere.
And his bank card.
Oh yeah, it's my bank card. I will show you guys that, but you might steal my numbers off there. But I'll holler at you guys on the next one. I hope you guys appreciated this this call. I know it's something a little bit different. It's Sunday night. And if you guys look hashtag the Gartley guy, it's gonna probably pull up all my posts because yeah. I need your info for the Forex and Fitness shirts. I got you, man. I got you. Matter of fact, hit me up on Instagram, man. Hit me up on my Modern Trades Instagram. I got you.
Yes, sir. Hey, y'all drop some sevens in the chat. Show some love to the Gartley guy, Mr. El Mono.
Yo, how do I stop recording this stuff? Oh, there you go. Yo, I appreciate y'all, man. And I appreciate Ray for the opportunity, not just teaching this tonight, but in general, because I almost bought some size 14 Yeezys instead of doing this. And that was almost a year ago now.
Yeah, we're going to do more sessions like this, so stay tuned. And we're going to get the recording video to you guys as well. Also, we'll drop it in the chat, so be on the lookout for that. And like I said, guys, thank you all for joining this session tonight, and we will keep this going for you guys, bring as much value as possible. Take care. Let's have a great trading week. Don't be too quick to jump in the markets today. It's only Sunday. Let the markets move, and let's go from there.